Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Donald Trump and Kamala Harris spar over the economy, abortion, and immigration in their first debate.
We have inflation like very few people have ever seen before, probably the worst in our nation's history.
Donald Trump left us the worst unemployment since the Great Depression.
Stocks slipping this morning as traders weigh the presidential debate and growth concerns ahead of an inflation report due later today. Israel proposes giving Hamas leader Yahya Sinwar a safe passage out of Gaza in exchange for freeing hostages and giving up control of the Strip. Well, it's just gone 8 a.m. across the Emirates. I'm Jumana Bersachi, back in Dubai today after a couple of days in Riyadh. So much to talk through on the show today. We're going to have all the analysis of that presidential debate. But first, as ever, a quick look at markets because it is shaping up to be quite a big session today as markets piece together some of the news that we got through from the debate. In addition to that upcoming CPI print is going to be a big mover as well for market expectations as we head into the Fed meeting next week. Again, as we spoke about yesterday, markets are leaning more and more towards that 50 basis point cut. And indeed, a lot of those growth concerns started to play out yesterday as it pertains to the financial system. You saw a big pullback in some of those stocks there. JP Morgan down 7% in the session yesterday. But today you can see that these S&P futures are leaning towards the red, down about 0.5% as a risk-off tone prevails. Some nervousness, again, as we head into the U.S. session around that CPI figure and concerns around the growth of the growth trajectory of the U.S. economy. 10-year yield sitting at 3.62. It's been quite a big rally the last week. We're down about 30 basis points since that JOLTS number came through just over a week ago now. And again, growth concerns weighing here. Brent sitting below $70. So this is a huge psychological level. Even though we are seeing a little bit of support come through overnight, we're up about 0.6%. Still, we have been covering this extensively. There has been very little in way of support for the energy complex here. Where we go from here, what we're going to discuss more on the show as well. And then the USD slipping somewhat, down about 0.8%. Keep a close eye on some of the major currency pairs. Dollar yen has fully wiped out some of the gains for the year now, so getting very close to pretty much trading flat on the year as more money gets poured into the JPY. Some of those carry trades continue to get unwound. Expectations that the Bank of Japan will proceed with rate hikes. And then also think about that in the context of the yuan as well, with some of those barbs coming through from the presidential debate about what the U.S. is going to do with their China policy. So that's that. But also, let's just take a look at how the debate polling odds evolved throughout the course of the discussions. As you can see, going into the debate, the market was sort of leaning towards Harris coming out on top. That is the blue line over there. As the debate progressed, what you saw is the polling odds move more and more favor, the betting odds rather, move more and more in favor of Harris, telling you that the instant reaction to this debate is that Harris came out on top. We will talk more about that. But Kamala Harris and Donald Trump has squared off in their first and possibly only presidential debate. The two candidates sparred over economy, immigration, abortion, and the conflicts in Gaza and Ukraine. Trump attacked Harris over a porous border and warned that migrants will overrun towns across the U.S. Harris said her agenda is focused on lifting up the middle class and working people of America.
Let's talk about what Donald Trump left us. Donald Trump left us the worst unemployment since the Great Depression. Donald Trump left us the worst public health epidemic in a century. Donald Trump left us the worst attack on our democracy since the Civil War. And what we have done is clean up Donald Trump's mess.
We've had a terrible economy because inflation which is really known as a country buster. It breaks up countries. We have inflation like very few people have ever seen before, probably the worst in our nation's history. We were at 21%, but that's being generous because many things are 50, 60, 70, and 80% higher than they were just a few years ago.
Well, for more on this, Bloomberg's Vonnie Quinn joins me from New York. Vonnie, great to chat to you. Well, there was always going to be a lot of focus on this debate, namely because it was the first presidential debate between Harris and Trump, that is, but also an opportunity for Harris to sort of introduce herself to many members of the public who were not familiar with her stance, with her policies, and also even her debating style. So was there a winner?
Well, Terry Haynes of Pangea Policy sent out a note right after the debate, basically saying that Harris was the clear winner. Jemana, of course, both sides are going to claim that they won, and there are already calls from both sides for a second debate. But for sure, it did appear that former President Donald Trump was more on the defensive throughout the debate. Haynes, for example, saying that Harris acted like a credible president, showed command of the issues. Now, consensus, we should point out before the debate, was that Harris was the candidate with something to prove, as you said, with something to teach America about herself. We knew from the New York Times Siena poll a couple of days ago that 28% of likely voters wanted to know more about Kamala Harris. I think it's safe to say that she definitely introduced herself to more people tonight. As for Donald Trump, it's not quite clear that he reached beyond the supporters that would have supported him anyway, the MAGA base, if you like. And that is really what both candidates are trying to do. We talk about, winning a debate. Well, what's that for? It's in order to reach new voters, not the decided voters already. So to that end, we didn't learn too much more about policy. We already knew a lot of what the policies both candidates were pressing were, but we definitely got to know the pain points of some of the issues that the candidates are dealing with.
I was going to say, were there any knockout punches that were delivered that will be standout moments from this debate? And as you say, will resonate with those members of the public who have still not decided who they're going to vote for?
Well, for sure, Kamala Harris, in her role, obviously, as former prosecutor and former Attorney General, did try to bait Donald Trump and did seem to succeed several times, to the extent that we saw him in the spin room afterwards. And that's very unusual for one of the debate contenders to appear in the spin room afterwards. But, for example, she talked about how people are leaving his rallies before they're over out of boredom. And she said that 81 million people had fired Donald Trump. But of course, that's a phrase that really gets under his skin. She also linked him to the right-wing policy blueprint Project 2025, which incurred some wrath from the president. And she said that she has the endorsement of 200 Republicans, including former President Bush and former Vice President Dick Cheney. These were all lines that definitely got responses from Donald Trump, and which made him really be defensive as opposed to talking about what he would do for the country. So while both candidates went into it wanting to be the candidate of change, she really got more time on that than Donald Trump himself did.
Vonnie, always good to talk to you. Bloomberg's Vonnie Quinn, thank you very much. Let's continue the conversation with Somesha Ferdinand, financial services lawyer at Ferdinand Law Group, who joins us now. So there's a marked contrast in how we're even analyzing this debate versus the prior one. And of course, the prior one, the one with Biden, there was a lot of talk about his mental acuity, his age, all of that. And it seems as though now the conversation has evolved, even though Trump, of course, is much more advanced in age than Harris is. And we're no longer talking about any of that. But what we are talking about is policy. So did you come out of the debates yesterday with a better understanding of what the policy platforms are of these respective candidates?
I think that Vice President Harris actually did a very good job of explaining some of the more detailed work in her policies by speaking to specific examples. So in terms of the middle class, she talked about, providing credits for child care. In terms of small businesses, she talked about tax deductions for expenses. She did that very well. As your colleague pointed out, Trump was slightly more defensive and speaking more about basically, you do what Biden did. And what she did was she responded during the debate by saying, you don't realize you're not running against Biden, you're running against me. And I think that will be a quote that will be repeated as the day goes on.
Yeah, and I just want to ask you a question because, wearing your financial services hat, there also was quite a lot of talk about economic policy, and within that regard, there was a lot of talk about China. There is bipartisan support on both sides to be quite hawkish on China, and a couple of barbs were exchanged, Trump saying that he would even want to increase the tariffs that were already in place, or that were put in place by the Biden administration. How does all of that resonate with the public? Did the public actually watch this and think, okay, well, if Trump is going to put more tariffs on cars, then that's going to incentivize me to vote for him? Does it actually resonate with the public and with businesses?
I think you ask a very pointed question, which is a very good question about U.S. voters, because they typically don't pay as much attention to foreign policy. They really look more on the things we talked about earlier. What are you doing for the middle class? What will happen for small businesses? To the extent they think about what Trump has said about tariffs, there may be some initial reaction, which is more, okay, well, I don't feel comfortable with China and EVs or electrical vehicles, but I really think it depends on how the younger demographics and women respond to these kinds of foreign policy issues, because that will be where Vice President Harris tends to get more voters.
Yeah,
and I think there'll be more.
And of course, there was a big part of the debate that was centered around reproductive rights, and of course, Harris was hitting Trump on the fact of criticizing Trump on the High Court's decision to overturn Roe v. Wade. To what extent do you think what came out of the debate today, again, on reproductive rights, will work or not work in Harris's favor?
I think, Jumana, that it will work. I think that she very clearly laid out in terms of reproductive rights that she would promote the interests of families if a mother's if a woman's health is in danger. She spoke about women being able to choose. Trump's response was more defensive and more, well, what we did with the Supreme Court is we just allow the states to decide without really addressing the repercussions of that Supreme Court decision. So I think she provided a lot of comfort, and it will really resonate with women and younger voters on reproductive rights.
How much attention were you paying to tone and demeanor? And again, in prior debates, not necessarily the one with Biden because the mics were muted, but they tended to be quite volatile, quite noisy occasions. What do you make of the overall presentation style? And again, does that matter to the voting public?
Joanna, I think it matters a lot. I think that her tone and her tenor was very presidential. It was much more controlled. Trump at times, he was on and off script, but at times he spoke, for example, about immigrants eating dogs, and there were things that certainly did not seem like very presidential behavior. And so she did very well on that. And as you mentioned earlier already, I think the polls will say, or the results will show that she did very well coming out of the debate.
All right, that's a good place to leave it. Somesha, thank you so much for joining us on the show today. Somesha Ferdinand, financial services lawyer at Ferdinand Law Group. Thank you very much. Well, Israel has proposed giving Hamas leader Yahya Sinwar safe passage out of Gaza in exchange for the group freeing hostages and giving up control of the Strip. This comes as doubts deepen about the two sides' ability to reach a ceasefire. Israel has also said its military probably killed an American Turkish citizen by accident, prompting the U.S. to call on its close ally to make fundamental changes to how it operates in the West Bank. Still ahead, forecasters expect US CPI to show another month of muted increases, playing into a debate over how much the Fed should cut rates. Julius Baer shares their investment strategy next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersechi in Dubai. Bets are set for about 150 basis points of Fed cuts by the end of February, ahead of the US CPI print due later. Forecasters expect another month of muted price increases, and Bloomberg Economics says that that will give the Fed an opportunity to go big. Let's bring in Mark Matthews, head of Asia Research at Julius Baer, who joins me from Singapore. Mark, how important is the CPI number going to be today?
I think it's relevant to the extent that if we get a negative surprise, clearly that would be unexpected and bad. But I also think that for a couple of months now, the Federal Reserve has been telling us that this is not the number it's focusing on the most. The number it's more concerned about is unemployment and the general cooling in the labor market. So unless you get a really nasty shock from this CPI number, which I don't see why we should, the Cleveland Federal Reserve has a fairly good track record using high-frequency data of forecasting the actual number. They're not showing a big uplift, and of course the oil price has been very helpful. So barring a negative number, I think the market will be happy with what we get and more focused on the labor data going forward anyway.
Yeah, something is interesting I thought happened in markets yesterday, and that is all of a sudden there was this perception that banking stocks are going to be at risk because of the downturn in growth or the expected downturn in growth. You saw the likes of JP Morgan drop 7%, other banks, Ally Financial warning about potential delinquencies to come. How much of a theme do you think this is going to be? And is that also likely to set the tone for markets in coming days?
I don't think that a rise in delinquencies is going to happen. And I know that the market has been concerned since the beginning of this month by a few data misses that could infer we're going into a recession. So I'll state that we do not expect that at all. We think those were exceptions rather than the rule, and the economic data will probably surprise to the upside going forward. So on that basis, if that's the reason why bank stocks were down, then I don't think they should have gone down, because we're not looking for a really bad economy in the U.S. This cycle has been not driven by a big expansion in private sector debt. Private sector balance sheets are very healthy, and the tolerance toward higher rates is therefore much higher than it has been in the past.
I'm going to ask you to put your Asia research hat on now in reaction to some of the comments that we got from the presidential debate. It seems as though one of the takeaways is that both Harris and Trump intend to continue with their hawkish policies versus China, and all this coming at a time when the Chinese economy is weakening. At the same time, what we started to see is further strengthening in the yen. Is this perhaps an opportunity for the yen strengthening to continue and renminbi weakness also to continue, one versus the other, given the political context, but then also what the Fed are about to do as well?
I don't think the yen should strengthen, because the gap between the 10-year JGB yield and the U.S. 10-year Treasury yield is very high, and it will remain very high even if the Bank of Japan raises rates a little bit and the Fed cuts rates. So not looking for a stronger yen. And what we have been seeing is repatriation of Chinese exporters' earnings that they'd been holding overseas back into the renminbi. They seem to feel that for whatever reason, the renminbi is not going to go down anymore. So I wouldn't think so. And then as far as the U.S. policy toward China goes, my sense is that both candidates recognize that it's easy to score brownie points, kind of being tough on China. But I sense that both parties also recognize that the sanctions and tariffs aren't really achieving their intended effect. And my sense is that both parties, but in particular the Republicans, would be willing to try to mend fences with China. So I think there's upside to U.S.-Chinese relations no matter who wins, but probably more with Donald Trump.
Interesting. Okay, that's a good place to leave it. We'll have to have you come back on again to discuss that point more. Mark Matthews, Head of Asia Research at Julius Baer, thank you so much. Well, coming up, leaders in the AI industry converged in Riyadh, a snapshot from a panel I hosted at the Global AI Summit, where we discussed innovation in the field and industry trends. Next, this is Bloomberg.
Today, the kingdom is the role of the kingdom is actually very well represented on the OECD AI Observatory itself. Today, the kingdom is ranked among the top countries globally in terms of AI policy, with more than 20 AI policies developed and shared with the rest of the world. And through this collaboration with the OECD, we aim to promote the development and sharing of trustworthy AI policies in the region. We also aim to join forces with the OECD to advance and advocate for evidence-based AI policymaking and regulation through the AI incidents monitor by leveraging, real-life AI risks and hazards rather than, theoretical debates and dialogues. And to deliver on this mandate, the Kingdom is already playing this role with many organizations. This year only, we held an assembly convening more than 50 Islamic countries discussing international AI governance. We've also held several ethical AI workshops with more than 20 Arab states. So I believe the Kingdom is well positioned to deliver on the spirit of the partnership, and we plan on conducting more of these engaging events with the region, but now in partnership with the OECD.
Let me ask you, how important is it that these guidelines for governance of AI are international in nature? Why is it essential that there is international collaboration and that you have organizations like the OECD looking to help countries come up with their own guidelines?
Thanks for the question, Jumana, and thank you all for this incredibly warm welcome. You ask a critical question. Why is it important that it's international? But let me start instead from a different place. We often talk about the abstractions, it feels like, of AI risks. They can become fears, they can become scares, they can become stories that we tell ourselves. I think of AI risks in the context of our lived experience, of what happens when a system that I'm supposed to interact with doesn't behave the way that it does. I think of the same experience for a person here in the Kingdom, for somebody in Southeast Asia, for somebody in Africa, for somebody in Europe. And I recognize that the future we're building of AI is one that's universal to all of humanity. That there is no difference in the experience that I might have with a poorly forming AI system than somebody who lives quite far away. If we acknowledge the universality of the human participation defining this AI future, then it strikes me that logically there's no answer other than to think of AI governance as a shared endeavor, as something that we have to do together rather than apart. The conversation about AI governance isn't a conversation really about one form of policy. It's not about how we govern a technology. It's about how we engineer a digital future that works for all of us.
That was just some of the panel discussion I hosted at the Global Artificial Intelligence Summit in Riyadh. Well, coming up, as oil sinks below $70 a barrel, we discuss supply and demand concerns as well as geopolitical risk premium with our guests next. This is Bloomberg. Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Donald Trump and Kamala Harris spar over the economy, abortion, and immigration in their first debate.
People start leaving his rallies early out of exhaustion and boredom.
People don't go to her rallies. There's no reason to go.
Stocks slipping this morning as traders weigh the presidential debate and growth concerns ahead of an inflation report due later today. Israel proposes giving Hamas leader Yahya Sinwar safe passage out of Gaza in exchange for freeing hostages and giving up control of the Strip. It's just gone 8:30 a.m. across the Emirates. I'm Jumana Versace in Dubai. Well, the theme for markets overnight is one of a risk-off bias. We had the handover from Asian equities quite weak, quite a lot of red on the screen. S&P futures also leaning towards the red as well, down about 0.5%. Despite managing to close up positive yesterday, it was quite a roller coaster session with a lot of dynamics at play, but namely a big pullback in the financial sector. JP Morgan down 7% in U.S. banking names yesterday, and of course, all eyes on that US CPI print coming up later today. 10-year yields at 3.62. Again, rallying throughout the course of the session yesterday. Today, another 2 basis points lower. That rally continues. I was just looking at what it was priced in now. More than 200 basis points worth of rate cuts are now priced in by May of next year. So quite a hefty rate cutting cycle is what the markets are looking for right now. Brent below $70, key psychological level, of course. We're going to talk more about that momentarily. Has been very difficult for oil to get any support around these levels. And then the USD also slipping a little bit, down 0.2%, seeing some firmness versus the yen is trading firmer versus the USD this morning, keeping a close eye on that. But the big event overnight, of course, was the presidential debate, and this was the instant analysis by the end of the debate. The reaction from those observed was that Harris is the one who came out on top, 56% leaning towards Harris, 48% leaning towards Trump, these per betting odds. So something to bear in mind as we head into the U.S. session. But let's also get more color on how some of these markets in Asia are faring. Avril Hong is in our Singapore studio standing by. It is a risk-off day. Avril.
Jumana, we've been closely watching that debate as well to get a closer idea as to how it might shape the future of U.S.-China relations. Indeed, going into the debate, the names in terms of stocks that we were watching were the chip ones. You heard from Kamala as well as Trump, and they sounded like at least there was one thing they could agree on, being tough on China and the support for the U.S. tech industry as well. Indeed, as they spoke, you had the likes of SMIC, the Chinese chip name, sinking further into negative territory. But of course, Chinese stocks have been looking really negative because they've got problems of their own. Even if you don't throw in the geopolitical concerns, domestic demand is weak. We are interestingly seeing the offshore yuan actually gaining ground, snapping a 3-session losing streak. To some, this signals that we are actually seeing traders pare back some of the concerns about the tariff odds, the risks surrounding that. Of course, as you mentioned a short while ago, we are seeing the firmness in the Japanese currency after BOJ board members' hawkish comments. That's being reflected in the risk-off among Japanese equities. Jumana.
Maybe in the case of the renminbi, it's a case of buy the rumor, sell the fact. Avril, thank you so much for that overview. Well, back to U.S. politics. Kamala Harris and Donald Trump sparred over foreign policy during their first presidential debate. Trump said the Israel-Hamas war would never have happened if he was in office. He also claimed that Harris hates Israel and the Arab population. The vice president responded, saying that Trump is trying to divide and distract voters.
This war must end. It must end immediately, and the way it will end is we need a ceasefire deal and we need the hostages out. And so we will continue to work around the clock on that. Work around the clock, also understanding that we must chart a course for a two-state solution.
She hates Israel. If she's president, I believe that Israel will not exist within 2 years from now. And I've been pretty good at predictions, and I hope I'm wrong about that one. She hates Israel. At the same time, in her own way, she hates the Arab population because the whole place is going to get blown up.
Well, quite pertinent for this part of the world. For more on this, Bloomberg's Vonnie Quinn joins us from New York. Vonnie, how did the candidates suggest that they could break the stalemate on the war? Well, that, in
fact, Jumana, was the question that they were posed. How would you break the stalemate? And Kamala Harris suggested that she would make sure that there was a ceasefire immediately and that the hostages would need to get out, and that was the only way to do it. Now, we've heard her, use this line before. She doesn't go into details on how exactly she would bring this about, given that, President Biden and, admittedly, her administration have been trying to do this for several months at this point. But she did repeat the line. She also, again, and we've heard her do this once before as well, gave some equivalence to Palestinians and their cause. She said there must be security for the Israeli state and in equal measure for the Palestinians. We must have a two-state solution where we can rebuild Gaza, where Palestinians have security and self-determination. Now, you heard what President Trump said. He said that he believes there won't be an Israel in 2 years if Kamala Harris is the leader, nor will there be maybe many Arab populations. He didn't give any specific reasons why he believed that or what he thought she would do to make that outcome happen. However, he believes that he'll get it all solved if he's elected. While he's president-elect, it won't even take him until January to get this all solved. But again, no details from either of the candidates on this particular question.
Yep, as the Biden administration keeps pushing to get that ceasefire deal across the line, and it seems the prospects of that getting done anytime soon are looking pretty dim. Bloomberg's Vonnie Quinn, thank you so much for the report. Well, let's turn to oil now. Brent is trading below $70 a barrel for the first time since December 2021. It slid a fresh leg lower following a rout spurred by demand concerns and robust supply. So for more on this, let's bring in Edward Bell, Head of Market Economics at Emirates NBD. I've really been trying to wrap my head around what is going on with oil here. Is it concerns over all the supply that's about to hit the market, or is it purely stemming from demand and prospects and some of the signals coming out of China looking weak?
Yeah, I think the big sell-off, the big move that we've had in the last couple of months for oil, in particular the drop now below $70 in the Brent market, has really been because that demand story, the kind of macro narrative around oil consumption is really starting to crumble and fall apart. The numbers out of China have been quite soft, or at least pretty disappointing if you look at headline manufacturing or the PMI numbers. If we look specifically at oil consumption in China, as far as we can measure it, it's been declining on a year-on-year basis for the past 4 months. If you look at other big economies, the Eurozone, the United States, all of them are flashing signs of cooling activity, and those are not great signals for an oil market. Now, on the supply side, we have seen the back and forth from OPEC about what they're going to do, but if we just leave them to one side, there is still substantial oil supply coming out from countries that are not part of the OPEC Plus alliance. So U.S. production is holding very steady, well above 13 million barrels a day. We're seeing new growth from other markets as well. So all of those are not great signals for the market, and I think it just sort of kind of came home to roost in the last couple of weeks and has prompted this big reaction downward.
But the curve is in a shape of backwardation, which tells you that even further out, so looking out into next year, people are still pretty bearish too. Have we not got to the point now where so much bearishness is priced in, it's going to take a lot more bad news to push the price of oil lower?
Yeah, I think the scale of the move that we've seen really in the last fortnight has probably been exaggerated, maybe more psychology kind of driven. With that backwardation, we've really seen the market crushing that. So if you look at, say, the Brent 1 to 12 month spread, we've gone from about $5 at the start of September. We're only at about $1 per barrel now. So it has really come down very heavily as we've had that steep sell-off in the front month prices. I think looking forward into next year, there is a lot of anxiety about what 2025 is going to look like for oil. We'll have demand projections updated from the International Energy Agency later this week. They've been projecting a year that looks roughly similar to this, you know, sort of around 1 million barrels a day of demand growth. That stands really in marked contrast with OPEC and their own projections, where they're still expecting to see more than 2 million barrels a day this year and a very strong performance next year.
Yeah, you've got to wonder also if whether the easing cycle is going to help boost demand, given that rates currently right now are very restrictive, but perhaps in a year's time things will look a little bit different there. How do you think that will, if anything, serve to provide some support to the oil market here?
Yeah, on the face of it, sure. Easing monetary policy with the potential for a softer dollar on the back of that as well could mean higher oil prices. But let's keep in mind, why is the Fed needing to cut rates? Why are other central banks needing to cut rates? It's because they don't want to be restricting their economies any further. They want to forestall any further slowdown in the economy. So while from a market's point of view, yeah, it could be positive in the fact that oil should benefit from a cheaper dollar and those kind of dynamics, if those if that monetary easing is coming because there's concerns about fundamental growth in an economy, that's not a great setup for oil either.
Well, what does oil trading at a $60 handle mean for the region economically next year? Where are the pressure points going to come from?
Sure. So I think at these kind of levels, you do start to have not concerns, but you start to see more fiscal deficits getting wider. It's already being projected for Saudi Arabia, given the scale of spending that they're doing. For the UAE, it's a little less painful or a little less of a worry because the break-even costs are a lot lower. We've got a much wider diversification in the economy. So what I think in terms of when we look at next year, it probably means more government borrowing, more sovereign issuances from this part of the world, which generally are very well accepted or well sought after by the markets. So it's not to us an overwhelming concern right now. And as I say, the scale of the sell-off that we've seen right now is probably a little bit overdone. It's not to say that it's, if we get back to, say, $80 or 75 to 80 in the Brent market, that a country like Saudi Arabia would really feel comfortable with that kind of those kind of price levels, but still it puts more of that push on trying to diversify the sources of income for the kingdom and others.
Yeah, we had a fixed income guest on the show yesterday, and one thing that we were talking about is the fact that Saudi sovereign spreads have tightened and yields have continued to rally. We're about 50 basis points lower over the course of the month, the same month where oil prices dropped 10%. So it does tell you that the bond investing community are able to distinguish between what is happening with the price of oil and Saudi's ability to fund itself. And oftentimes, the broader public don't get that distinction. Yeah. No, I think we have very strong credits across the region, sovereign credits, and benefiting from the move that we've seen in U.S. Treasuries as well. So they're going to be getting some uplift on the back of that. So again, a little bit more comfort for the region that if they do need to go out and borrow, it can be at a bit more of an accommodative pace, accommodative rate. Final one for you, the U.S. dollar. We're just coming off the presidential debate. We know that Trump doesn't like a strong USD. He wants to export more. How likely is it, do you think, that this weakness in the USD is going to continue once the Fed begins officially their easing cycle? Yeah, we're still targeting some more depreciation in the dollar against some of the big peers, euro, yen, sterling into 2025. And I think that's partly on the back that we expect the Fed is probably going to have to do more to cut rates compared with some of these other central banks. Markets have probably exaggerated the scale of that move, say with the Fed versus the ECB or other policy banks around the world. But yeah, I think there is probably some more room for the dollar to slip going into 25. Yeah. Okay, Ed, we'll leave it there. Thank you so much for coming on the show today. Edward Bell, Head of Market Economics at Emirates NBD. Now for a look at some of the other stories we're following this morning. Bank of America CEO Brian Moynihan is warning of weakness in his investment banking unit. He expects third quarter earnings to come in flat at about $1.2 billion. That is lower than what some on Wall Street expected. And in contrast, Moynihan says the sales and trading business is on track for a modest revenue gain.
Low single digits year over year based on our estimates through 7, 8 trading days, whatever it's been this month, 6, 7 trading days. So we'll be up low single digits year over year and kind of flat for the second quarter. Now, why is that important? Is about 5, 6, 7 years ago we started investing in that business, and you've fundamentally moved it up. So this is the 10th quarter. If this comes out, if the rest of the quarter fares the same way we thought it would, you will have a 10th quarter in a row of year over year revenue growth in that business.
JP Morgan shares fell the most in more than 4 years after President Daniel Pinto said that analysts are being too optimistic on next year's expenses and net interest income. The remarks added to a more pessimistic outlook for the biggest U.S. banks after Goldman Sachs CEO David Solomon said on Monday that trading revenue at his firm is on track to drop 10% in the third quarter. So lots of caution coming through from these various leaders in the banking industry. Now, Apollo Global Management is working on its first exchange-traded fund, ETF. It's teaming up with State Street on an offering that will include private credit investments. The ETF still needs regulator approval, and State Street joins firms such as BlackRock and Invesco in looking to make private assets more accessible to individual investors. Now, coming up, Turkey is working on expanding its military presence in Somalia. We'll have the details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Turkey is said to have held talks with Somalia about setting up a site to test farm missiles and space rockets. Ankara, along with the UAE and Egypt, is strengthening ties across Africa as Chinese investment slows and the global space race heats up, rather. So for more on this, Bloomberg's Ndiro Ganga joins me now from Kigali. Interesting, out of Turkey, what do we know so far, and what is the justification for them putting these bases in Somalia?
Jumana, what we know so far is Turkey's president says they're working on increasing the range for their domestically built Typhoon missile. Previously, they've tested it on the Black Sea with a range of 561 kilometers, but they need to test it in long ranges. And that's where Somalia comes in. It sits at an ideal location off the shores of the Indian Ocean. So that solves the range problem without increasing the risk of the debris falling in residential areas. And this is also a two-way deal. Outside of the ballistic missiles, Turkey is a new player in this race to space, and they're looking to fire some hybrid rockets to space. Hence, they want to build a spaceport in Somalia.
Interesting. So is this part of a bigger partnership deal between Turkey and Somalia? Are there going to be more deals that are going to come on the back of this, or are we just starting with this initial step with the view that perhaps later on they can build on that relationship?
Absolutely, Jumana, but they're building up on this relationship. They've just signed a partnership to enhance economic and defense cooperation for the next decade. But this partnership dates back to all the way in 2011 when Turkey's president visited Somalia, and we began seeing funding going into key sectors like education, like healthcare, like security. And it's important to know that if we zoom in on security, Turkey is playing a mediator role between Somalia and Ethiopia over their tiff with Somaliland. They've also built their biggest overseas base in Somalia, and they're helping their troops fight al-Shabaab and also rebuild their country. But they also have their eyes set on natural resources. They'll be dispatching a hydrocarbon ship to search for oil and gas, and they're also looking at mining corporations in other parts of Africa like Niger.
Ndiro Ganga, thank you so much. Always good to chat to you. That was Ndiro in Kigali. Now for a look at some of the other stories we're following. Ghana's cocoa industry regulator is looking to raise the price it pays farmers for the soft commodity by 65%. The country is aiming to curb smuggling over the border to the Ivory Coast, which is set to increase the amount it pays farmers. Over the last 3 years, Ghana's cocoa crop has been falling due to weather and disease, driving the price to record levels. Anglo is looking to sell around 13 million shares in Amplats as the company prepares to exit its controlling stake in the Johannesburg-listed mining giant. The British mining group is looking to raise around $400 million from the stock sale. In May, Anglo announced plans to exit its stake in Amplats as part of a wider restructuring plan in response to a $49 billion takeover proposal by BHP. And coming up, the European Union is injecting $35 million into South Africa's green hydrogen industry. The details on that next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. The European Union is providing 2 grants totaling $35 million to help South Africa kickstart its green hydrogen industry. Europe's Energy Commissioner Kadri Simpson visited Pretoria as part of a wider EU initiative to help Southern Africa take advantage of its wind and solar resources.
And these 2 European Union grants will be implemented in a way so that they contribute to South Africa's strategic objectives of, first, adding value to the local economy, second, move up higher in the value chain, and also develop the knowledge economy and spur growth in other sectors.
Well, for more, let's bring in Jennifer Zabazaja, Bloomberg's chief Africa correspondent. Jen, good to have you on the show. What is behind this latest investment? Why is there interest from the EU in South Africa?
Right, Jumana, we've seen this happen increasingly with the EU. We saw this recently with the EU investing into Namibia, which is, of course, a neighboring country here in South Africa. And so this appears to be, as you were mentioning in the intro, just another step in the European Union's efforts to potentially not just kickstart the green hydrogen economy here in South Africa, but also globally. We've seen reports from BNEF, Bloomberg NEF, that has estimated green hydrogen could potentially be an impactful part of the transition. And so the EU has a lot of incentive then to contribute to this, in particular in this part of the world. We have seen other places, of course, like Chile and elsewhere try to step in as well in the green hydrogen industry. But still, it's very expensive. So what we heard from officials on Tuesday is that potentially this investment can help kickstart the production of green hydrogen, hopefully then accelerate development development and as well, in addition to that, jobs here in the local economy. But of course, the incentive too is for Europe, because they lost out on their own natural gas support from Russia, and they are looking, of course, to get their own energy resources. And so it's beneficial on both sides, really, if you look at the way that this deal is constructed. But what is going to be key is them actually following through on a lot of these investments and these projects that are being developed.
Yeah, and you wonder how long it's going to take actually to unlock some of the potential. How does this position African nations in the global green hydrogen industry?
Right. Well, what I was mentioning before, so what we saw from the EU is not too long ago, they invested millions of euros into Namibia's green hydrogen industry. And so this potentially sets up South Africa to, in some ways, start to develop that out and provide a counter to what we're seeing in Namibia. But still, as I was mentioning there, it's still very expensive to develop green hydrogen. What we're seeing from some of the estimates is that it costs between $2.50 and $4.50 a kilogram to make. And in order for this to actually be competitive, it needs to be below $1 a kilogram. And so there's still quite a ways to go for Africa to make some headway into this global energy market. And not just that, as I was mentioning, there is, of course, the fact that there still needs to be jobs development and skills development. And so this potentially makes some inroads, but still quite a ways to go.
Yeah, certainly appears to be the case. Jennifer Zavizaja, Bloomberg's chief Africa correspondent, thank you very much. Well, so much going on in markets today. The big event, obviously, is going to be that CPI number coming up later. The market is penciling in 0.2% month on month. But if we get a downward surprise, then that could be a catalyst for markets. As we head into the European session, everything is in risk-off mode. That was Horizons Middle East and Africa. I'm Jumana Versace in Dubai. Stay with us for Daybreak Europe.